Hi everyone, it's Harun from harunkolda.com. Thanks so much for watching. Today I want to show you a video that I did with my mentor, Morgan Sampson. He recorded a video while we were talking about his copy trading portfolios. So without further ado, watch this video and enjoy, and get back to me if you are interested.
Hello everyone, so today what we're going to be doing is a topic about the union portfolios that we are currently managing within the MS Equities Group. There's a total of 3 different portfolios that we have under management: a US dollar denominated portfolio, a pound denominated portfolio, and a South African rand denominated portfolio. During this conversation, I'm going to be talking with a client of mine, Harun Kola, and we'll be discussing the dynamics of the portfolios, the performance of the month of December, as well as the months running up to it. And we'll do a little bit of an overview about the 2019 year on top of that. Harun, how are you doing?
Hi Morgan, thanks for having me on this call. So my name is Harun. Like Morgan said, I'm one of his clients. I follow his South African rand denominated portfolio. I'm also one of his sales agents, and that's my background. I'm a Forex IB, and I introduce people to the Forex market. And I've always wanted a credible Forex trader that could manage my portfolio on my behalf. Morgan is also my mentor, and while I'm learning, I thought that it'd be a good idea that I could earn money while I'm learning.
Most definitely. No, in terms of our future plans, it would be great that we'd be able to begin developing a partnership together and see how we can begin impacting the market. I definitely think there is a massive gap in the industry for skill when it comes to people that can manage accounts and produce, long-term results. I'm sure that's something that you've been able to experience quite a lot, that finding reliable traders is very difficult.
Absolutely. I've been searching for copy trading solutions for the longest time, and I've had bad luck. I've had traders lose all my money. I've had traders not trade the account at all. And finally, I could find one with you, Morgan, with your Alpha fund, where it's consistent, stable returns every month. And I'm absolutely thrilled to have it on my account and also to suggest it to other people as well.
Most definitely. And in terms of your experience, you might be speaking locally, but I think for the international market as a whole, regardless of where you are in the world, it has been very difficult to find those managers. I think a major issue is a lot of these managers that are qualified to do a job like this often are working for the hedge funds, investment groups. So we've always wanted to position ourselves in that area of expertise and try and ensure that we can deliver that professional service to the retail markets, which very few companies are able to do in this regard. Harun, what I was going to do is jump into the 3 portfolios and discuss it. I know you said that you're in the MSC Alfa portfolio. So for the purpose of this video, just to disclaim this, we have 3 different portfolios under management. The reason why we do that is mainly because this allows clients to deposit capital into their accounts, depending on which currency they prefer. So Harun, living in South Africa, prefers to deposit his capital in South African rand. And recently we decided to open up a GBP, British pound portfolio. And then one of our longest running portfolios is denominated in US dollar. So for the purpose of this video, we are going to be going through the 3 separate portfolios, specifically due to the fact that the focus at MSC Wealth is to produce a book that would be very similarly managed to how a professional fund manager would manage the book. So we'd have our short-term positions, medium-term positions, and long-term positions. An important thing I'd like to make clear to all of the viewers of this video is that in terms of how we build our positions, if you can see one portfolio is performing a lot better than the next portfolio, it's specifically due to the fact that there are different long-term positions on those portfolios. So Harun, what I was going to do is make sure that I can screen share with you, just so at least you are able to view where I'm looking. That makes it slightly easier for us. So just let me know when you're able to see on the screen.
I see it now.
Okay, great. Just let me know if it freezes or there's anything wrong with it. But what I was going to start off with is just give an update on the last couple of months of performance. So in terms of how the Union portfolio management system works, just to make sure that we can make that clear as well, we will upload a separate video discussing the fact that between a portfolio like a client of Harun and ourselves, the portfolio is going to look slightly different. I know, Harun, I think you joined only in November.
That's correct. I joined midway through November, so mine looks not totally different, but a lot different.
A lot different. There we go. So I just wanted to make that clear that for Harun's portfolio, it will look slightly different. When each client logs into their portfolio, they are seeing the performance they have produced on their account as a net performance figure. So even the cost of the performance fee will be deducted from that net performance figure. So in terms of our performance figures that we charge, it's a 20% performance fee, which is a very simple performance fee to charge. We do not charge any management fees or any markups on spreads. So in terms of that performance fee, that's deducted, and then the client's net results are displayed. So for the purpose of this video, we're going to be using the main portfolios that are seen through the open links that we'll provide in the video description as well. And in terms of that, what we'll do is make sure that you are able to access these portfolios and see them for yourself. Now, what you will see is that on the very left-hand side, these portfolios are updated live. So there's no issue with these portfolios with having lag. These portfolios are updated every single time something in the portfolio happens. So just to break it down, what you're going to see is that for the 2018 year, as we are now sitting on the 4th of January, in terms of the 2018 year, we had 4 months of performance in order to try and produce as much return as we could. Our decision was, in terms of opening up in September, our previous portfolio, the IRQ Union portfolio, that was opened in September as well, September 2017. So we decided that opening this in September would also make life a lot easier for us to monitor these portfolios annually as well. In terms of our performance, we were able to produce just shy of 3.8% on this portfolio. We are very happy with those returns. One issue that we did experience with the MSE Alfa portfolio, this is the South African Rand portfolio, Harun, that you belong to, is that being able to build those long-term positions without having the time in order to build those positions can be very difficult. So if we don't have a run-up of a couple months in order to build up what kind of trade ideas we'd like, we're not able to produce those returns excess of 1.5–2.5%, depending on the month that we are in. In terms of what we were able to begin establishing for the 2019 year is to get ourselves to that 1.5–2.5% return per month. One thing we don't like to stress ourselves out about is a month of underperformance doesn't mean the month following that should stress us out. We do our job as we do our job, and regardless of what the previous month was, the next month is about focusing on creating stability for the client and ensuring that we're not going to make any drastic changes to our investment process. It can be very dangerous when a portfolio manager starts changing what he's doing in order to produce excess results to try and cover up a loss or something that may have gone wrong. So in terms of our total return, 2019 is already sitting up over 0.5%. We have some open exposure to the European markets in currency, as well as to the Norwegian kroner. We're also having a look at the opportunities to go long on the oil markets for more of a long-term book position. We're going to be building up different long-term positions, short-term positions, and medium-term positions. So for the 2019 year going forward, I'm really looking forward to what the South African portfolio is able to produce. And I definitely think that we'll be seeing a lot better results out of this portfolio. Regardless, if we have a look at, for example, the trades and we filter these down, we'd be able to see that on the closed trades alone, if we filter that, and that comes through for us. So in terms of the trades, in order for the clients to digest slightly more closer into exactly what we're doing, if they're more analytical than the average client, they'd be able to actually go in and have a look at every single trade that we've taken. So they'll be able to have a look at the cumulative net profit, the net profit per trade as well. They'll be able to see that the only major loss that we've had was on a US trade, which was a hedged position. So that's also important to disclose, that one of the only losing trades that we've had was actually a hedging position. So that wasn't even a losing trade idea. Regardless of that, we still are able to show that in our portfolio. In terms of the average return per trade, the return per trade deviation, they'll be able to have a look at that as well. They're able to also have a look at the balanced drawdown, so exactly what kinds of drawdowns we're taking. Luckily, the drawdown in this portfolio hasn't exceeded 1% since inception. So we're very happy with that. And then to the right-hand side, they're able to actually have a look at every single one of the trades we've taken, as well as filter them depending on the instrument, whether they're open or closed, positive or negative, or a buy or sell. And they can also filter based on how long ago they want to have a look at the trade, so they can go to all history. So on that, for the clients and for anyone watching this video, you can go and have a look at that. So Harun, what I was going to do is, try and differentiate this between the ILQ portfolio. For the purpose of this, the main reason why I would like to do that is to try and disclose the fact that there is a difference between a long-run portfolio and a short-run portfolio. So this is definitely seen as a short-run portfolio, only having 4 months of track record in order to provide. In terms of the other portfolio, we can show you the long-term portfolio. We have excess of 16 months worth of performance, not including January 2019. So Harun, just let me know when you can see the new portfolio up on your screen.
I see the new portfolio, Morgan.
Okay, that's great. So Harun, what I was going to do here is just show you the difference between what a long run portfolio looks like and a short run portfolio. So in terms of the performance focusing more on 2018, the ILQ portfolio is seen as one of our primary portfolios. This is a portfolio we were able to launch with an Australian family office, Capital Management Group. They were so kind to provide us with a portion of equity to copy from. So initially, the balance of this portfolio is sitting at about $12,000, but our copy trading systems are able to leverage that and copy to some much larger accounts based with a private client. So in terms of the 2018 year, we were very glad to be able to produce a 27.7% return. Now, in terms of the performance of 2018, we were definitely far beyond the benchmark. Depending on where you look in the world, Harun, I actually compiled a piece of data to show you for the purpose of this video. I thought you might find it quite interesting. So the Barclay Hedge Fund Index is an index that we make use of to benchmark our performance. Now, let me know when you see there should be a picture up on the screen for you to have a look at.
Okay, it hasn't appeared yet, but I'll alert you as soon as it does.
Okay, so just for the purpose of this, in terms of the Barclay Hedge Fund Index, just to explain that is a hedge fund index that audits the performance of close to 4,700 funds based all over the planet, with exposures to basically every single different market, from the emerging markets, from equity long bias, equity long shorts, the equity market in general, event-driven macro, general macro strategies, global macro index, healthcare and biotechnology. So we're basically covering almost every single index available across the planet. Now, in terms of the performance for 2018 year to date up to the date of 20th December 2018, when this data was compiled, the average return was sitting just shy of 0.86% loss for 2018. So in terms of that, in terms of some of the other benchmarks you can look at around the world, you're basically sitting flat or slightly down on the year. that basically means that very few clients made any returns for 2018. So regardless, the South African Rand portfolio sitting only at 4% return over 4 months, that's definitely even a very good return to produce for an entire year worth of trading. So in terms of going back to the ILQ portfolio, what we'd be able to show in this is the difference between how ILQ and the South African Rand portfolio differ. So for example, in December, we were able to close out a vast majority of our long-term positions that we were holding. Whether it was our positions in gold that we were holding, some of our positions in the US market. For December, we were able to produce a 9.9% return alone. Whereas if you have a look in the FINSA portfolio, the South African Rand, there is a difference in the returns. This is specifically due to the fact that these portfolios are based with different long-term positions, different short-term positions. The gold position we took, we started getting into that position in July 2018. So that just shows you the difference between how some portfolios will outperform others, specifically due to the age of the portfolio. But regardless, we were happy to be able to produce that, and going forward, in terms of 2019, for all three portfolios together, we are going to do the same thing. So in terms of the Variance portfolio, our British pound denominated portfolio, where we will do the same. On this portfolio, we only have 2 months track record in our British pound portfolio, but the same, we would like to keep on producing returns for all three portfolios, and we'd like to balance them out altogether. So Haroon, when you log onto your platform, you see the same performance that is in all three portfolios. Just doing this manually as a portfolio manager, from time to time, it will go through fluctuations. And that's just important for the clients to understand. Haroon, I just wanted to open up to questions, see if there's any questions you wanted to ask me.
Yeah, I've got two questions. So the first one is just clarity on, are you saying that the shorter term ones, or the ones like the ZAR, the South African Rand, and the pound, because they're newer, you haven't opened up these longer term positions like you did in the US dollar one, and that's why the returns are much smaller? But what you're doing now is that you are opening up those longer term positions in these newer accounts. And going forward, we will see these kind of returns in those two newer accounts. Is that correct?
Most definitely, yes. So Haroon, an important part that many clients need to understand is that we try and balance between, and it's a form of risk diversification. We are trying to balance between our long-term positions, our medium-term positions. So a long-term position is anything between 4 months to 8 months, sometimes up to a year. Our medium-term positions are anything between 4 weeks to 4 months, and our short-term positions are anything less than a week. Now, in terms of producing our short-term positions, we do not struggle much with those, but we always try to diversify across all three. So if we aren't able to find any medium-term and long-term positions, the only sector that will be able to produce returns for the portfolio is our short-term. Now, that's not a problem at all, except in terms of us diversifying our risk for our clients, it's most important that we try and diversify across multiple different portfolios. For 2019 going forward, for all three portfolios together, we are focusing on building a book once again for all of the portfolios. So the FINSA South African Rand portfolio should be expecting some very good returns for 2019. Our goal is to produce anything in excess of 20% return for 2019, with the hope that we could produce between 25 to 30% return for the 2019 year. And in terms of our goals, we'd like to diversify that across different currency and asset classes as well. So we will do currencies, commodities, stocks, and indexes as well.
Okay, great. That makes a lot of sense. I also had a question on the previous account where you mentioned your loss, and you said it was a hedged loss. Do you mind explaining that to me a bit further, please?
Yes. So in terms of the hedged positions that we sometimes hold, we have a strategy of averaging into our position depending on the volatility of the market, based on the fact that a great deal of our strategies are the principles of them are based around volatility. From time to time, we can land up taking a position slightly early. Now, how we focus on handling a position that sometimes is taken too early, that dives into a loss, we will focus on, firstly, managing our risk up front, so taking a very small position up front, and then slowly but surely, depending on how far the position extends beyond our first order, so the first position we take, whether we're long or short, we will try and add into that position either lower down or higher up, depending on whether we're going long or shorting. Then the focus is to try and cover the loss of whatever we might have had on our first position. And if we decide that the market is not going to return to where the first position was opened, we will close in a net profit as long as we've diversified the risk by averaging in higher up. So for example, if we open a position that moves 100 pips into a loss, and then we add another position and it moves back another 50 pips, now we're net neutral, because we've got a 50 pip loss on our first order and a 50 pip profit on our second order. But what we'll do on the second order is we will add a slightly leveraged position. So if we are going in a volume of 1 lot on the first order, on the second order we'll add in a volume of, for example, 2 lots. Now also in terms of our hedged positions from time to time, there is a different way. So that's first what we call averaging in. The second one is where we will actually physically hedge the position. So we'll go long and short at the same time, depending on the risk that we see in the market. Sometimes we are able to close the hedged position out in a profit. So let's say, for example, I'm shorting a currency. So I'll go short on the currency, but at the same time, I'll go long. If the currency begins to keep on spiking and it extends to an extreme level of volatility, we'll close that hedge, meaning that long position, and we'll close that in a profit, and then we'll cover by averaging down like the first strategy I explained to you. And what that does is that just maximizes the amount of exposure we have to the market in terms of profit, while at the same time ensuring that the portfolio doesn't stay in a drawdown for an extended period of time. Now, this strategy is not a perfect strategy, but it's an easy way for us to try and stay net neutral. An important thing that we must make clear on this portfolio is these portfolios are a time-weighted monthly calculation, meaning that it is factoring in our open exposure as well. So for example, in June, July, August, and September on the IRQ portfolio, all 4 months are in a loss. However, there were very few losing trades during every single one of those months. It's specifically because there was a drawdown taken on the gold markets that drew away the profits that we made those months. So even though all 4 of those months in a row were incredibly successful months of trading, because we had a drawdown, that calculates based against what profit we produced that month. So it's exactly the way a hedge fund operates. A hedge fund tries to stay market neutral, so meaning not in a loss and most of the time in a profit, because on a monthly basis, their returns are reported to their clients. For us, it's the exact same thing. And that's why hedging the positions is very important for us.
Okay, it makes more sense now. Thanks for clarifying that, Morgan.
Most definitely. In terms of what the registration process is for the clients, I think what would be important for us is that we do a combination of a registration video at some stage soon. I'll also do a breakdown talk in the future, discussing all of how the portfolios are structured from step 1 to step 5. So we'll talk about how the portfolios calculate, how the portfolios balance out, all of the different types of graphs that are available for the clients to make use of. So just to close off this talk, I think to anyone that wants to understand more about what we do and how we do it, we will very soon be opening up this topic of discussion to a monthly update. So although this is the first time we've done this video together, we are going to focus on improving the content of this video, the quality of the video, and we will be constantly uploading new content every single month, discussing the performance of the portfolios. But on top of that, we will also do additional videos talking about how to register your portfolios. For Haroon Kola, what we will do is we'll also add in links to his website where you can register. Haroon is incredibly good at working with clients. I've seen him on the go, and I've been very impressed with some of the things he's done, with some of the reviews that I've been able to see about Haroon. And I definitely think that to anyone who's interested in registering with his company for us, so you can register through Haroon's company directly onto our portfolios. He is always helpful. He's always there to speak with you and see how he can help. And then we'll be able to spark up a discussion with any clients that are interested in joining.
Thanks for the endorsement, Morgan. And I must say that I've been very impressed with you as a trader and as a mentor. And just the same thing you said about me, Morgan is also very approachable. He's always treated all of the prospects that I've passed on to him with dignity and respect and patience. And I'm just so happy to be a client of the MSC Alfa Fund, but also a referral agent. And I think this is something that every South African and really every person in the world should at least find out about and know about the possibility that it actually exists.
Most definitely. I think that a topic of discussion we'll also breach into is talking about the 2018 year and how so few clients across the planet, not just in South Africa, were unable to produce returns. Not only were they unable to produce returns in the recent weeks ending of 2018, I received some very disturbing calls from people that have received their annual statements showing that they've not just not made money, but they've made massive losses in certain areas in the market. Now, depending on where some of these wealth managers expose your money to, you might have made money, but you will probably have not made money because majority of the market was down. So I think for the topic of our next discussion, we can also focus on that. We can talk about how being able to open up into a portfolio like the MSC Wealth copy trading portfolios can diversify your risk as an investor in the financial market. And I think for the future, we'll make sure that we keep all clients updated through Haroon's website as well as through our own websites, through the MS Equities Trading website. But please bear with us. Very soon we'll have an extensive video library of topics and of videos. But to anyone who wants any additional information, please make sure to get in contact with us. Our contact links will be down below in the description. And with regards to the additional information, please make sure to comment down below what you think you would like to see more of, you would like to hear more of. And to anyone who has any questions on this video, please make sure to ask those questions as well, so we can answer those in the next topic of discussion. We should be able to have another talk at some stage soon between Haroon and myself, so we look forward to speaking to you soon. Haroon, is there anything you want to say by closing off?
No, just to thank you for taking the time to make this video and to invite me on. I'm really glad to be part of this team.
Haroon,
to the viewers watching, thank you so much, and I look forward to being in touch with all of you. I hope you get in touch with us.
Most definitely. Haroon, it's always a pleasure to be working with you, and I'm looking forward to having our networks meet each other over the internet, and I'm also looking forward to working with you personally over the 2019 year. I think that for an ambassador of our South African clients, we are looking forward to sending them your way, as we do know that you'll do the job right and you'll treat them properly. So to close this off, thank you to everyone watching, whether you're from South Africa or from around the world. To anyone who's interested in getting in contact with us, you know what to do. And both Haroon and I are looking forward to working with all of you and taking steps further into 2019, into another successful year of trading. And I think this is a good start. We're sitting on the 4th of January and we're getting lots of work done. So we're looking forward to seeing what the year brings for us. Cheers for now, everyone.
Cheers. Thanks, Morgan.